This is Nitya Caleb, and you're listening to Food in Canada, the podcast. Hello, everyone. I'm Nitya Caleb, your host and the editor of Food in Canada. Today on the podcast, we have Amanda Norris, senior economist at Farm Credit Canada, to discuss how this year has been for Canada's food and beverage processing industry, as well as to get an outlook for 2026. Hi, Amanda. Thank you for joining us today.
Hi, thank you very much for having me.
You're welcome. So, as you know, it's been an unusual year with many twists and turns. So, I expect your team spent a lot of time creating market outlooks and forecasts, only to go back and revise them within a few weeks and months. So, how has the year been for you personally?
It's kept me busy, that's for sure. There's lots to monitor, and yes, lots to revise, and just lots to reflect on, and to hear from the industry has been really interesting as well, because hearing from those people on the ground is really the best way we can understand how these changes are impacting on a day-to-day or week-to-week basis. So it's been an interesting year, but it's a fun year.
That's lovely. That's one way to put it. So, Amanda, tell us, how did the food and beverage manufacturing sector perform in 2025?
For sure, yes. So a lot going on in 2025. And I will start by saying we don't have all the final data points. So check back early next year when we release the FCC Economics Food and Beverage Report for 2026. I'll have all the data at that point, but we have a pretty good sense of what's happened so far, and so can make some judgments on kind of how the sector went. So if we look back to the 2025 food and beverage report, the sector is actually doing a little bit better than we had expected when it comes to overall sales, but we are still seeing challenges with respect to volumes. And so the way that FCC Economics looks at sales, we look at what we call nominal sales. So this is sales, price times quantity. This is the sales that are happening in today's dollars that the processors are receiving. And then we also try to take away that price impact and just look at quantity. And this is a little bit more challenging, but it gives us a sense of what the volumes are. Are people buying more or less? Are we exporting more or less? Not just are we experiencing higher or lower prices, because price really does have a big impact on sales. And so we try to look at the sector through both lenses. So you'll see that concept through the food and beverage report and other reports that we put out. So on the sales side, a little better than we anticipated. Margins didn't get as much of a break as we had anticipated. And that's just on the cost side. The cost did not come down as much as we expected. Not surprising. There has been uncertainty. There has been trade challenges. So not super surprising in the results that have come out. So it was an okay year overall for food and beverage manufacturers. But yes, some sectors did perform better than others.
That's great. Amanda, you mentioned a couple of factors. That's probably the reason why the industry performed the way it did. Would you like to elaborate on that?
I'm going to narrow it down into two factors. And these are two factors that we talked about in our food and beverage report earlier this year, and are still prevalent today. So the first is the tariffs. And I think I can still say threat of tariffs, because it's always changing, and that's really challenging for a business. So I'll start with tariffs as one of those factors. Yes, we know now that most food products continue to enter the US tariff-free after the CUSMA compliant exemption was put into place. That being said, it's really where the good news stops. We also have to look at the indirect impacts. So just because something is moving doesn't mean it wasn't challenging, or that the fullest potential was reached when we're talking about exports. So we also have to remember the other tariffs. So yes, we are faced tariffs exporting to the US. We also face tariffs importing products from the US into Canada. And we also face tariffs from China. So that's three different tariffs changing all the time to manage. And so there's that unquantifiable cost of that increased paperwork and compliance burden that it's really hard to factor that into the balance sheet and factor that into our forecast. But we have to recognize that it was there, and it created uncertainty and a lot of challenges for the sector, and disproportionately for small and medium businesses who maybe only have maybe one or two people who are working on this paperwork, or who are trying to navigate both production and the paperwork aspect of it. And it's complicated, and that has created a cost that we may not see come through right away.
When the tariff were imposed, when the retaliatory tariffs, I got calls from many companies asking, what is the process? Where do I go to find the forms to fill? So it was quite stressful for companies.
Exactly. And we can't, even if the sales are showing at the top line, we can't undermine that stress and that uncertainty and how that has impacted investments as well. So we've seen investments fall off. Capital expenditures in the sector are down at 10% this year. And that's not going to have just short-term impacts. That has longer-term impacts. And that really comes from uncertainty. If you don't know how much you're going to sell at what price, why would you put a lot of money into investments into a certain area when you don't know? So we're going to see those impacts further down the road. So tariffs are there. We talk about them, but there are so many factors underneath that are impacted the sector this year, but will continue to impact the sector going forward. So that was the biggest factor, I would say. The second is the consumer. And the consumer is always a factor. Every year we can talk about the consumer. But just to touch briefly on the consumer, the big factor was that per capita consumer real expenditure. So this is taking out that price impact on food and non-alcoholic beverages, started to stagnate throughout the year. So it's actually down. What this means is that for each person, each number of the population, when you divide out those expenditures, people are purchasing less food. And that's where we're seeing that show up in the volumes. And that goes back to the population targets set by the government. Again, that's going to continue having an impact going forward. So starting to have an impact in 2025, that slower population growth, again, we can expect it likely to continue going forward as well.
Good to know. Thank you, Amanda. So now let's just dive into each sector. I want to start off with the baked goods processing sector. Now, how did that sector perform this year?
So the sector does seem to be benefiting from lower inflation, which is positive when it comes to being competitive. Strong food service sales. So the quick service, we have to remember that not all of these products are going to retail from processors. So the quick service market uses a lot of baked goods when we think of buns or sandwich bread. And those sales have been good this year. So that's been a positive for the baked goods sector. We've seen sales fall just a little bit compared to a few years ago. But when we look at the longer term trend, the overall sales tend to fluctuate with commodity prices, like I had mentioned. But when we take out those price impacts, volumes are quite stable over time. So it might increase 1 or 2% up and 1 or 2% down. Not a huge concern. Relatively stable on volumes. Sales are also struggling a little bit this year when we factor in price.
What do you think is going to happen in 2026? Do you see any major shifts for that sector?
I don't see major shifts for the sector into 2026. When we think of this sector, we think of household staples and bread, pitas, tortillas, crackers, bagels, items that households tend to be pretty consistent with buying. And so going back to that population growth, that will be important to monitor for businesses, because if it is a staple item with bread, if we have fewer people, it makes sense that volumes and demand for that product might come down a little bit. The sector also includes some of the more indulgent products. So there's kind of the staple side and then the indulgent cookies and pastries. we'll have to focus on health trends. Again, not something new for the sector, something to continue watching, reducing sugar, focusing on micronutrients, and just having that health conscious consumer in mind going forward. So that's what I would say for 2026. We're expecting a bit of a sales boost for next year. And on the expenses side, those lower commodity prices we've been seeing for grain inputs should help on the expenses side. So a pretty positive outlook for the bakery sector with those few caveats of health and population growth.
Absolutely. Thank you. I'm reminded of, I'm wondering not so much for the baked goods sector, but perhaps for the confectionery sector, how the front of packaging might start impacting them. It'll be interesting, a trend to watch in 2026. Now, talking about the confectionery sector, how did that perform in 2025?
So confectionery sector had a good year in 2025 overall. Boost in exports as well as domestic trends towards more snacking. So this sector includes things like energy food bars and granola bars and nuts and dates, and it also includes the chocolates and the candies as well. But it's a big category, and those more health oriented or snacking foods helped this sector this year, just because we see an increased snacking trend that's going on, and this is the sector that will benefit likely the most from that trend.
But when you say snacking, obviously there's a caveat attached to it, right? It's snacking products with a health halo. That's what's going to perform well, I'm assuming.
Yes, snacking with mindfulness, I guess. Yes.
That's right.
Yeah.
Did the volatility in the cocoa commodity market, have any impact at all in the confectionery sector?
For sure, it will have. It did have impacts when it comes to margins, rising prices. We have seen cocoa prices and sugar prices start to come down, which is a positive. Again, when we look towards 2026, it's always going to be a watch item because that is really related to the growing seasons around the world. And those ingredients, sugar and cocoa, come from a very small geographic area in the world. And so any unknowns related to the growing season can pop up and impact expenses and therefore margins going into 2026. So always a watch item. And we definitely saw those impacts in 2025 work through the supply chain. And businesses start to kind of innovate and adapt because it's likely going to continue.
Burritos recently released a chocolate compounds to address, to basically address the volatility in the cocoa market. Give us something else that processors can use instead of completely relying on cocoa.
Yeah, that was super interesting, and it just shows how the sector is able to innovate and adapt, and that's just one great example. So I think that's super interesting, and I'm really interested to see how it gets incorporated as an ingredient going forward.
And we also saw some capital investments from the confectionery companies, right? Like Ferrero opened up expanded its production facility in Brantford, and Barry as well, and made some major investments as well, opened a third chocolate factory as well. So that kind of gives a sense that they are confident about that market and that sector specifically, and are bullish about growth in that sector.
For sure. Those are all positives especially for the Canadian sector.
Are you concerned at all about the ongoing investigation into these pistachio recalls due to the risk of salmonella?
Recalls are something that the industry has to contend with all the time. I don't know a lot about this specific recall, but it is something that processors continue to work to reduce, but also I think it just underlines the importance of traceability and having traceability in your operation, not just for an outbreak where you can be very targeted in maybe the line or the production or where that product came from. So it has less of an impact on when we talk about longevity, but also the amount of product, if we can pinpoint that. Traceability is also important from the consumer perspective, knowing where their products are coming from and where the ingredients are coming from. So traceability overall, really important. And these food recalls that come up sometimes are just reinforce the importance of implementing traceability and focusing on traceability in your operations.
And I think that's one of the complications with this particular recall because they're not able to, because the way it's been used and the way it's been brought into Canada, traceability is a big concern. And that's why we're having CFI and Health Canada's investigation being so dragged on. And so, it's taking a long, long time for them.
For sure.
Moving on to the seafood processing sector, how did it perform in 2025? What were some of the challenges?
Yeah, so the seafood product preparation packaging industry had a strong year in 2024. So expected to fall slightly in 2025 and remain stable into 2026, just after that surge in growth. Exports are very, very important for this sector. And there was a new challenge that came up in 2025, and then that goes back to the tariff conversation with China. So not only was it canola products, which is what we hear about most in the news, China also put tariffs on various seafood products from Canada. And so they took effect in March, and it did place pressure on some businesses. We saw exports decline, and China is the second largest export market for Canadian seafood products. So that had an impact on sales in 2025. And the domestic market is not as strong in that sector. The Canadian market continues to face challenges for demand. So the sector really does rely on exports.
Absolutely. What do you think is going to happen in 2026?
For 2026, there's always a wild card in this industry on climate. And so I would be remiss to not talk about climate, whether it has positive or negative impacts on the seafood sector in Canada. It's always there, and it's always top of mind for the industry. The other challenge is the domestic market, as I mentioned, continues to make up a small percentage of sales, and we continue to see competition from lower priced imported products that also challenge. So Canada produces and exports very high value seafood products, but cheaper imports of some canned or processed products do come into Canada and make it challenging for the sale of those. But Canadian consumers are just not, the preference isn't there for fish and seafood. It hasn't been growing. And it's also higher priced compared to other proteins. And so while we've seen, let's say, beef prices increase quite rapidly, but it's still, chicken and pork are still relatively competitive. And so that challenges consumers to choose, if they're going to choose a protein source, from whether it's land-based or seafood, and they're already strained for budgets. That has an impact as well on sales. So that watching that price competitiveness is important as well.
Absolutely. Thanks, Amanda. Talking about beef, chicken, and pork, how did the meat and poultry sector perform in 2025?
It's a sector that we combine, it has everything, meat manufacturing.
Yes.
And we know that those beef, pork, poultry all performed differently this year and had their own kind of challenges and opportunities going forward. So yes, we only have forecasts for meat, and it, on a sales perspective, done really well over the last year. That being said, we are seeing those volumes, when you strip out that price impact, those volumes are coming down. So what that shows is the manufacturers are passing along higher costs, specifically for the higher cattle prices through higher beef prices. Those are being passed along the supply chain, but consumers are purchasing less from the meat manufacturing sector overall, is what that shows us. And we anticipate that will continue into 2026. So margins are being supported, although those meat manufacturing industries need to be watching their costs as well, because they have very high cost of inputs when it comes to cattle, and pork prices are also stronger this year as well too. So managing those input costs while also still being competitive in your final market is kind of the balancing act right now.
Yeah. Well, did we in 2024 the avian flu had a big impact on poultry production? Did things improve in 2025?
It seems to be a better year in 2025. Not saying there are still cases of avian
Yeah.
influenza that are happening in Canada. We're seeing a little bit of a resurgence in the fall migration, which is typical. So definitely keeping an eye on that. But is it having widespread impacts on the availability of birds at this point? Not seeing that from the processing level.
That's great. And I'm not sure, did the tariffs that China imposed, did that affect our pork producers and processors as well?
I haven't heard of major
Okay.
impacts when it comes to pork in China. The sector is doing relatively well this year. That being said, like I talked about earlier, that doesn't mean there isn't those indirect impacts that are impacting the sector, whether it's like, okay, where do I diversify trade? How do I market my product? So there's going to be impacts at the business level, the overall sector level. Hasn't been quite as pronounced, but impacts are still there for sure.
Yeah. And I'm assuming the upcoming trade negotiations with so many countries is a concern for our primary producers, because
Mm-hmm.
they definitely want to protect their market, while also seeking new markets. So there's a delicate dance that's going to happen on that front.
For sure, especially in the poultry sector, but also when we look at pork and beef as well, there are voluntary country of origin labeling that's coming into effect in 2026, and that's from the U.S. And while it is voluntary, there could be the impact that there is less demand in the U.S. for Canadian products, or just less demand for products that aren't labeled with the country of origin labeling of the US. So what that looks like for the processing sector for beef and pork, we'll have to see, because it is voluntary, unlike the mandatory country of origin of labeling that had come into play quite a few years ago. But if there's reduced demand for live animals from Canada, is there going to be more live animals in Canada to process for domestic processors? But also, is there going to even be a demand for beef and pork products, final processed beef and pork products in the
Yeah.
US? So how that plays out will really, it's a watch factor for
Yeah.
2026 for sure. For sure.
Absolutely. Absolutely. Now, when
Yeah.
we talk about the dairy sector, how do you think it performed in 2025? Were there any major challenges?
So the dairy sector in 2025 had a solid year, not a record-breaking year, but very consistent. Sales were up, volumes were up, margins were up. So all in all, a fine year for the dairy processing sector. Very consistent, like we talked about bakeries. It's a staple item. So not any major challenges, because we talked about trade,
Yeah.
not as vulnerable to trade in that sense. A little more vulnerable to that population slowdown, as we talked about. It's a staple item. People purchase it, dairy products, weekly. And if there's fewer people to feed, then population slowdown could impact sales. So
Mhm.
that's the major challenge that we started seeing in 2025,
Mhm.
a little bit.
And what's your forecast for 2026? What's the outlook?
2026, again, a positive outlook. Two items top of mind that will shape the industry in 2026, but also going forward. Dairy processors are focused on CUSMA trade negotiations. When those are going to happen, what's going to happen. Again, it's just uncertainty, but the news and the conversations are indicating that dairy is likely to be a a portion of those negotiations. What that looks like, we don't know. What the timelines on that, we don't know. So again, a watch item that could impact sales late next year or even into 2027. The other is the strong preference from consumers for protein. They're both within the dairy category as well as other categories in which dairy processors could provide ingredients for maybe the confectionery or the bakery sector. So the processing sector is demanding more protein. The producer organizations across Canada have responded. There are changes coming to the milk component pricing at the producer level next year, where the emphasis will be on pricing protein in a favorable way to get more protein into the supply chain. So that will take time, and there could be that challenge to meet the protein demand in the short term, but the industry is responding, and so there's positives around this demand for dairy protein.
Yeah, I agree with that. We had a recent webinar on consumer trends, and Nick Gibson from Nielsen IQ mentioned that products containing whey protein, the demand for that had gone up by 70%.
Yeah.
So huge demand.
So it's just a matter of the industry being able to respond and meet that demand. That I don't know. That maybe not it's not a concern from great, there's lots of demand, but the concern is more, okay, how do we meet that? How do we keep up with that demand? And is it sustainable? And how do we keep up with it in a sustainable way?
Now, one of the things that made headlines this year was Lactalis exiting the plant-based beverage category. They introduced the Enjoy brand, but then they just couldn't. They discontinued it as well within a very short span of time. What's happening on that side of the sector? Plant-based, beverages and milks had solid growth for a few years now. Are we seeing a decline in sales and volume?
I don't believe that there is a decline in sales and volumes. I just don't think it has increased at the pace that it has historically increased. So I don't know a lot about the plant-based beverage sector, but the competition, if we're seeing that protein is really taking over, if we're seeing simple ingredients and the processing level, like consumers may be not as eager, and that growth may have stagnated a little bit at this point. So I think it's more of probably a stagnation at this point rather than a decline in demand for that product.
Okay, makes sense. Moving on to the beverage processing sector. Now, what were the challenges and how did that sector perform in 2025?
So sector is very mixed as well. So we have two components, really. We have alcohol and we have non-alcoholic beverages, and they're moving in different directions. And so sales actually in 2025 were up overall. When we adjust for those prices, again, those volumes are down. And that's really that there's higher costs of alcohol, but people are consuming less alcohol. Not surprising. It's a trend that we've been seeing for a couple of years away from alcohol. There's a bit of a divergence even within alcohol. Beer is really struggling, but we see distilleries doing a little bit better, actually, just because of that ready-to-drink category. And the ready-to-drink category is doing okay when it comes to alcohol. Overall, alcohol sales are down, but the category that's doing well is ready-to-drink. And so any kind of mixed beverages that use products from distilleries, the distilleries are doing a little bit better from that perspective. The non-alcoholic beverage market continues to gain momentum, diversified new flavors, types of beverages hitting the shelves. We're seeing even alcoholic beverage companies looking to acquire a non-alcoholic beverage. They're trying to diversify their portfolios. So we are hydration beverages, caffeinated beverages, sparkling waters, even NA, beers and wines. They are gaining momentum, and we expect that to continue. New flavors, new packaging, and new micronutrients, or like we talked about, protein, or getting those products designed for what the consumer wants. So we'll see a lot of innovation in that sector and growth potential for the non-alcoholic beverage sector.
Yeah. There's going to be some impact because of the tariffs on aluminum. So that's going to
Yes.
be impacting that sector a lot.
Yeah, so that was a challenge, I would say starting in 2025, but also as we head into 2026. And I say this because you can stockpile, if you have the facilities and the warehouses, and some of those larger companies are able to get that product. And it's not just the aluminum cans, but also cardboard packaging and packaging materials in general that have struggled. So you can stockpile that at the beginning of the year in 2025,
Yeah.
but those are going to start to dwindle away.
Yes.
And so with the steel and aluminum tariffs continuing, it's going to impact the bottom line for sure.
Amanda, just to put this all together in perspective, now, what is your overall outlook for the food and beverage processing sector? And what factors or indicators will you be monitoring in 2026?
It seems positive.
Yeah.
It seems really positive outlook for 2026 when we talk about sales, when we talk about margins, volumes. We're all expecting at this point those to increase. That being said, that was the sentiment that we went at this point in 2024 that we had. So anything can happen in the world of geopolitics that keeps businesses on their toes. And we've seen it's an incredibly adaptable and resilient sector. But what it means is that growth is not, if something like that happens, that growth is not going to be quite as positive. And we're going to have another year of getting by and adapting and just keeping our head above water, as opposed to increasing investment and innovating and getting new products and new markets and diversifying and that growth mindset back. That being said, there's been uncertainty a lot in the last couple of years, and businesses will need to focus on the efficiencies within their own operations to manage that unknown. So the unknown is kind of becoming very common. And so what can you do to boost productivity wherever possible, to increase your efficiencies? Because nothing is certain in these markets except uncertainty. So, and you can't, as a business, you can't control the interest rates. You can't control geopolitical trade agreements. You can't control inflation, those kind of big macroeconomic factors. Focus on controlling what you can control in your own operations, whether that's investment in technologies or scheduling your downtime on maintenance on your machines. So really focusing on setting your business apart and controlling what you can control. And I know businesses are doing that, and that's great. And that's really what has to happen in these times of uncertainty. And I'm really hopeful that we can get back to a growth mindset where we focus on investment and innovation and value added and productivity in 2026 and beyond.
Now, before we conclude, I'd like to ask, if you had to pick a theme, now, obviously, apart from the trade uncertainties that we saw, if you had to pick a theme that defined 2025 for the F&B processing industry, what would that be?
The theme for me has been uncertainty. And I know that's been used over and over again, but it's the truth. And uncertainty, it hits so many different elements. And so that theme of uncertainty has not just impacted markets, but it's impacted investments and impacted innovation and sales margins. So uncertainty is really the theme for me, and navigating how businesses have navigated that uncertainty is really incredible. It's challenging, and the businesses have done a good job with that.
Yeah. And I think that's the story for me as well. I mean, there has been uncertainty, but the way the Canadians came together and the way the companies were resilient, innovating, and doing what you were just saying, Amanda, focusing on the parts that they can control. I think that's the biggest takeaway for me for 2025.
Yes, yeah, it's been a bit of a year of doom and gloom, but I do think there are little nuggets of positivity that we can see and hold on to as we look forward.
Absolutely, Amanda. On that note, thank you so much for the chat today.
Thank you so much.
This has been Food in Canada, the podcast. Visit foodincanada.com for more episodes.